And we really have a tale of two retailers. Shares of Ross stores, they are down about 3.5% after issuing guidance that fell short of analyst estimates. Now, in the meantime, Deckers Outdoors, the maker of the shoe, the UGG, looks to open higher. It's up 5% right now and better than expected fourth quarter numbers and a strong outlook for its fiscal year. So Ross stores down, Deckers is higher. Well, overall, retail stocks have been slammed recently on concern that coming higher tariffs will absolutely crush them and the consumer. Pretty much everybody believes tariffs will hurt retailers. Look at these May results. JCPenney, Kohl's, American Eagle, Zumiez, Big Lots, all down more than 20% this month. But you know, dear viewer, when everybody believes one thing, maybe it's worth a look at the other side. You're supposed to buy when everyone else is selling, right? And vice versa. So is there a scenario where higher tariffs could actually help the retailers in the long run? SW Retail Advisors, a.k.a. the Duchess of Retail, Stacey Widlitz, is here. Now, I pitched this segment to you, and you told me I was insane. But here's my thesis for the viewers, which is retailers for years, what have they complained about? Too much inventory, no pricing power, race to the bottom, no one's making any money.
Correct.
Tariffs give them cover, like an airline, to raise prices. Tariffs go up 15%. Is there any scenario where they could raise prices by 20%? The consumer survives and they make a little more profit and use the tariffs to blame.
So here's the deal. When the tariffs were at 10%, I would say yes, that could be true because consumers expect this price increase. And at the same time, the retailers, all they do is squeeze the vendors and then they raise prices and they make the difference. Now that we're talking about 25% increases, you can't possibly squeeze the vendors enough, pass it on, and get that margin. You're passing that on to the consumer, which means the consumer likely will push back in volume, and Best Buy talked about that yesterday.
Okay, but a 15, and I'm not making light of the tariff, 15%. So you got a pair of jeans that's $40, okay? So 15% is what, $4.50. So now the jeans go from 40 to 44.50.
You're doing math. It's early.
It's a little early for math. I get that. But is that the end of the world for? I understand they will sell fewer items.
Yes.
But shouldn't they be more concerned about profit per item than total volume?
So,
that was my point.
Yes, but the problem is if their cost of goods are going up, they're not actually making more money. However, if they push through price increases and the consumer expects it, and then somehow this tariff situation works itself out and prices have already gone up, then they stick. That's very sticky.
So, Duchess of Retail, so the jeans are 40, they go to 44.50 with the tariffs.
Right.
Okay? The tariffs go away. The jeans stay at 44.50, and now the Macy's of the world, the Levi's of the world, the whatever, now they're making more money.
In that case, they can make more money. And of course, you have to see kind of what the volume impact is. So, but it is true, once you do raise prices, they tend to be sticky. And by the way, what has happened over the past 18 months? Most retailers and brands have cleaned up their channel and have stopped promoting. So consumers have already kind of seen some of the discounts be pulled back. That will reverse itself, of course, because most of the earnings were pretty crummy in Q1 and inventories are back up.
Well, there's a school of thought. I mean, there's viewers right now like, you idiot, like people can't afford the 44.50. Okay,
Right.
Give me a break. Right, we didn't have a cell phone bill 10 years ago. Now everyone pays $100 a month. Suddenly we're alive, we survived. A 50-cent jump in the price of gasoline is bigger, ultimately, for most Americans than the tariffs.
Absolutely. And
the retailers will be able to figure this out, will they not?
In many cases, they will. So I think in some cases, like with consumer electronics, obviously it's a bigger impact and it's a highly discretionary item. So far, the tariff increases have been on appliances. That's need-based, so the volumes haven't come down that much. But it depends. It depends on the product. But yeah, if you put through a price increase on apparel,
the bottom line of this segment, as we showed, could we bring up that wall again? The numbers, many stocks down 20, 25, 30% this month.
Yes.
Has the market overreacted to the fear of tariffs?
It depends who you are, and I would say the ones that are down 20%, it had nothing to do with tariffs, like a Kohl's, had nothing to do with tariffs. We're talking traffic increases of mid to high single digits. We're talking execution issues. We're talking other problems. If you look at a Best Buy, yes, I would say absolutely that's valid. Best
The
Buy
stock's
was
up.
down 6%.
Best Buy is up 30% this year, and they sell giant electronics made in China, and yet they're up 30. Yes, they fell yesterday.
Yes.
But folks, look at the long term. Best Buy's up 30% this year, not exactly dying because of tariffs.
So
why am I getting so worked up?
You can't put everybody in the same bucket, but I would say, yes, this is an opportunity to pick up certain stocks. You look at a Home Depot. I mean, Best Buy obviously is up huge. It will impact them, but they're doing the right thing. They're just putting it out there yesterday on the conference call, saying, here's the impact. You know, we're going to have a hit in terms of unit.
Okay.